Hi, we're back. Thanks for staying with us. I'm joined in the studio now by Matt Chipman. He is the editor-in-chief of the Green Baron Report. Matt, always good to see you.
Glad to be here again, Don.
Well, you know, we were talking earlier in the program, actually, I guess I would say in the monologue, and, you know, it just appears to be what I'll refer to as, well, I'll say what Rush Limbaugh referred to as a fake economy. I mean, it's a fake recovery. I mean, everybody is telling us in the news media that we have a recovery going on, but I don't think a lot of consumers and investors are really buying into that very much. What do you think?
It's plodding along. I mean, we are seeing some strength in the Dow Jones. Look, we're touching up against a 4-year high on the Dow, hitting 13,000. Unemployment, I think, is those numbers, although, you know, you always worry about can you trust them.
Right.
I think there is improvement, and I think that's, you know, that's the big key there, because you got more taxpayers, and that's the only way you were going to get ourselves to pay down our debt and to get out of this is to grow the economy. Where everybody argues is how are you going to grow the economy? How do you go about it? Do you tax corporations less?
Right.
Do you tax people less? Do you tax them more? We certainly can't tax our way out of this, because that just cannot happen. So you got to grow the economy, and that's where the argument comes. How do we do it?
Well, it all comes down to revenues, because in the mid-1990s, when the internet became a commercial enterprise, all of a sudden, you know, many thousands of new companies were created, you know, hundreds of thousands of new jobs were created. The economy was just buzzing along, and the revenues went through the roof. Wow. That made for a very nice period of time.
I think the internet has made everything more efficient, you know, so we're able to do a lot more business than we used to,
right.
Without burning up a lot of wasted costs. You know, some of those costs are at the detriment of some companies, as you've seen. A lot of industries have gone away.
Right.
You know, you no longer have video stores. You don't have, you know, look at Kodak, you know, filed bankruptcy. Sears is on the you know, chopping block, but it seems to be doing okay. You got Kohl's with revenues down, so because, you know, probably at the expense of a company like Amazon, who is seeing things increase. But you know, gas prices are my concern now.
Right.
You do have an improving economy, and gas prices are slightly inflated. I know at least 30 cents from these tensions over Iran.
I mean, let's talk about gasoline prices, because I got into a long discussion about that at the top of the program. I mean, if the Strait of Hormuz is blocked, or if that traffic is somehow interrupted, there are analysts saying that here in California, for example, Southern California, where we tape this program, we could see $6, even $7 per gallon gasoline prices. You'd have to think that that would bring the economy in this part of the country and other parts of the country where gasoline prices are high, like, say, Chicago, that would bring it to a screeching halt.
Well, it's a huge unknown risk factor, no doubt about it. And so, you know, that's why you don't go all in,
right.
in one area of investment. You do have to spread your money around. You know, I still see fantastic opportunity in the area that we look at, you know, and I am amazed how some of the stocks that we follow have so much going for them, so much opportunity, and they stay so low. They're usually the last things that go up, just like the millionaires and the homes that you know, gets sold off in foreclosure are the last ones to be sold. You know? So.
Well, you know, I mean, there's a lot of talk in Washington, D.C. that this is all the fault of the rich, but I can't anywhere in my lifetime remember that someone became poor because someone else became rich. I don't think the two are tied whatsoever. But, you know, investors need, I guess, momentum. They need to see momentum. Now, of course, the Dow has had tremendous momentum. It touched 13,000 early in the week, and that is certainly something that creates momentum. And I've always felt that the stock market is usually about 5 or 6 months ahead of the rest of the economy. So if the rest of the economy is 6 months behind what we're seeing right now, then the outlook for the next 6 months has to be good. I
think barring any cataclysmic event, anything like barring a war or unforeseen natural disaster of epic proportions, the markets are improving, right. You know, and I think it's going to continue. I came on before. I like the way things are looking, and I'm very confident about the space that we're in. We had been beaten up for years, Don, and some of these small companies. This is a great time to look at stocks down here.
Well, I agree with you, because you and I, you know, we tend to concentrate on the small emerging companies, those companies that have got great stories, new business ideas, new technologies, and we just saw one here on this program with that amazing pool filter that essentially eliminates that apparatus and plumbing in your pool. I mean, what a great idea.
It's a fantastic idea. In fact, I grabbed him on the way out.
I think he sold 3 while I was here in the studio.
Yeah.
But you know, those are the kinds of things that we like to look at, because that really represents the future of our country. And if a company like that can take off with many millions of pools in the country, for example, think of all the jobs that would create.
I think those are fantastic ideas, you know, and eventually somebody like that probably going to get bought out by a major, and they'll take it out. But the thing is, though, if you're invested in a company like that at the right time, you can make many times your money as opposed to sitting around earning 2% in the bank.
Well, you're absolutely right. And let's face it, I mean, with the amount of bank closures, they don't make headlines like they used to make. But you pick up your financial section of the Sunday Times, and there's always at least another 5 or 6 every week that have been seized by the FDIC. I mean, it's not the safest place anymore, and you have to be concerned about that.
Yeah, and we still got to touch on the problems with European debt. I mean, it's not just going to go away. Greece, they've got a handle on it for now, but who knows what's going to happen next
Well,
month.
they've got a handle on it temporarily. I mean, I don't know that the default that was basically avoided, that we all thought was coming next month, I think that's been pushed back 6 months to a year. I don't know that we're ever going to get past what's going on in Greece, because they had embraced basically socialism for such a long period of time that sitting at home and getting your check is a hard habit to break.
Yeah.
And but let's shift gears back to the United States, because we're the country of opportunity, the land of opportunity, where if you work hard, get a little bit lucky, you can make things happen for you. I know that you, again, as I mentioned, you and I tend to watch the same kinds of companies. Do you see a lot of things on the horizon next several months?
I think I've seen some of the best opportunities I've ever come across. I really have. We focused on 3 or 4 companies over the last 6 months that I think some are up, some are off a little bit, and some are about the same. But if things work the way I think they're going to work, with some financing coming in and the developments I see coming online, these stocks are going to be up several 100% over the next 6 months.
The website is thegreenbaron.com. Be sure to visit that, and I guess they can join by clicking on the join icon, right?
Yeah, just click any join icon. Make sure you get a confirmation email that you've joined. You can unsubscribe at any time. We make it very simple and easy for you.
The Green Baron Report. The website is thegreenbaron.com. Matt, as always, thanks for your input.
Great. Thanks for having me.